Yeah, what's up guys? Welcome back to my channel. Okay, this is kingsfx right here. So in this video I'm going to be sharing with you the best strategy on volatility. Okay, trading volatility 75, 10, 25, 50, 200, 100 other volatilities. This is the best strategy for you. Okay, this could be a game changer to your trading success. Okay, now look at how this strategy works. It's very simple. I'm already in, okay, into this trade. Okay, and if you look closely, you see I keep telling you guys that what keeps you profitable in the forex market is your ability to maximize your profit and minimize your losses. When the market condition favors your strategy, you should make the most money. When the market condition is kind of bad in terms of your strategy, you should be losing a little amount of money. A lot of traders, the reason why they blow account, the reason why they are not profitable yet is because they allow their losses to run, thinking that the price will retrace, the price will reverse, and then they cut their profit short. Once they start seeing those blues, they are going to start closing their trade, forgetting that once they lose maybe one trade or two, all the profit is gone. So your ability to hold your profit for long once you are right, okay, with your speculation is what will keep you profitable. Because once you're able to hit that massive win, okay, for you to lose the money is going to be very difficult with a good risk management. Okay, so now I'm already into this trade, and I'm going to be sharing with you how it played out. The trade will play out at the end of the day. Okay, so I'm currently kind of down here, but look at how this strategy works. And you can now, before I proceed with the process and everything, I will share with you this risk management. Okay, now if you look here, you can see I have my stop loss right there. You can see my stop loss at this point here. So that's where my stop loss is, and this is my entry point. But look at my TP level down here. Okay, look at my TP level down here. So you can see this is more than 1:15 risk reward that I used. Okay, these are about how many pips right here. So I'm targeting about I'm targeting about 122.0 something, so 122 pips. That's what I'm targeting. So what am I risking right here? So if you look closely, I'm risking about, let me just share this also for you to see how this strategy works. So on this trade, I'm risking about 8 pips. I'm risking about 8 pips, and I'm targeting 120 something pips. Okay, so that's how your strategy should look like. You know, when you are losing, if the price should go against you, you are just risking little amount of money. Then if the price eventually goes in your favor, you make the most money. Okay, so if the price actually in your favor, you make the most money. Okay, you make the most money. Then if the price actually go against you, then you just make little losses. You will see you are going to be losing less, and that's the game, that's the business. Okay, when you are right, you make the most money. When you are wrong, you risk a little percentage of your trading capital. Okay, so how do we use this strategy? So if you look here, I have just one indicator right here, okay, in the main chart, and that's exactly what we are going to be using. You can see that the price is still ranging here. I'm just waiting for that massive drop to the downside. Okay, so I'm already into this trade, and I'm waiting to see how it plays out. So why did I enter this trade? This strategy is very simple to use. Okay, so you can see I have my indicator right here, which is my Ishimoku. Okay, so now what do I do? Why did I even enter this trade? First, you just need the price to cross your Ishimoku to the downside or to the upside. Okay, so if you look closely, the price have been up from that point, starts running to the downside, you know, keep moving. Then after the breakout, you don't just jump into the trade. Okay, on volatility now, you don't just jump into the trade. you wait for a retest to that level. Once you see a retest to that level, so you wait for a retest after breakout. Okay, so once you see a retest, the next thing you're going to be checking is what is the candlestick doing around that area. Okay, so you want to see what the candlestick is doing around that area after a retest. Okay, so now if you look closely, after this the price retested this zone. Okay, after the price retested, you can see that the price starts having being rejected at that zone. We start creating that weak rejection. So after this first candlestick right here closing bullish, the next one also closed bullish with long wick. Okay, with long wick, showing that the buyers are losing their position right there. Then after that, I had this massive bearish candlestick right there, which is bearish engulfing. It actually kind of gave me the signal that, oh, we are about to push the downside. So the selling power have entered this market to push this price way to the downside. So all I need to do is to just wait for a little pullback again to enter, or you enter at the close of that bearish candlestick. Okay, so the best place to take the trade is at the swing high, which is right here at the swing high, which is my entry. Okay, so don't bother about whatever the price is doing. The important thing is that you will definitely be in profit if this price plays well. Okay, so the important thing is once the price goes in your favor, you make the most money. Once the price is against you, you are risking little amount of your profit. Okay, you can see where I set my TP. I didn't, sorry, my stop loss. I didn't set my stop loss too tight to that level because the price can actually push to this level, and I did not even set this at the end of the weeks. I rather set it above my Ishimoku a bit. Okay, I set the price above here. Okay, so if you look, that is my stop loss right here, just to allow my price to breathe. Okay, so a lot of us, sometimes we are right with our speculation, our analysis, but our stop loss is always tight. So if you see here, I'm just risking little amount of money right here. Okay, and as I'm still giving the stop loss room to breathe. So you just have to know the place you position your stop loss. You have to give it a bit gap or room, okay, for movement. Now this is exactly how to enter this trade. I told you, you have the price break your Ishimoku, then wait for the price to retest. At the retest point, wait for candlestick patterns. Okay, wait for candlestick patterns like right there. So once you see a bearish candle, if the price breaks to the downside, then look for a bearish candlestick pattern to enter your trade. Okay, so let's also backtest to see what actually plays out. If you look here, the price from here retested, breakout. If you look at the retest right here, you can take this as retest. Okay, after the retest, we have tweezer bottom right here. That's the candlestick pattern right here. So you have the tweezer bottom, which is a bullish candlestick, and after that you can see how massively the price trend to the upside. So each time there's a breakout, most time, okay, most time there's always a retest. Let's just push it down. You can see the price coming way from here to the upside. So the price actually broke that level at this point. Pay close attention. The price break here after the breakout from our level, which is this Ishimoku right here. The price retested that level again, pushing way to the downside. So after this retest, you will picture our tweezer bottom again right there. These two candlesticks, tweezer bottom, that is a candlestick pattern. It simply means that the bottom, or the end of the candlestick, that is the bearish candle, the closing and the opening is at the same place, and there is no movement further. Okay, like you see them at the same point. Okay, so I'm trying to draw with my free hand. So they are equal at the bottom. So it must not be equal at the top. Just bottom is okay. Then it's known as the tweezer bottom right there. The opposite is the tweezer top. So once you see this retest in there, then you look for a candlestick pattern. After that, you take your trade. Okay, so we still go and see most of the breakouts. You always have a retest. Okay, so let's see from here. the price is actually ranging here, but you see that the price keep retesting this zone before the massive push to the downside. The price always retest before a massive movement to the downside, like this one here. Okay, so but I needed to see a more perfect example. Okay, so if you see here, the price actually from here breaks to the upside, and you'll be waiting for a retest. It didn't give us any room to enter this trade. So after breaking to the downside from this one also to the downside this way, the price tends to retest again. So all you'll be looking for at this point now is any bearish candlestick to take this trade. Okay, once you pick any bearish candlestick to take this trade, then you go. If you look at this one also, the price is always, remember why I'm not going to be taking trade in this kind of zone is because the price is already ranging. So the price is actually going in one direction. If you see here, the price will break to the downside from here, break to the downside, break up, downside up. You see the price ranging. So you wouldn't want to take this strategy when the price is ranging. So this price is actually ranging. We are not doing anything. You want to see a clear trending market from the upside breaking down to the breaking to the downside, or from the downside breaking to the upside. So you don't want to see a ranging market. Just imagine this, the difference between this and what we have here, or this particular point, what is happening right there, and this particular current price action. You can see how the price massively dropping to the downside, okay, from here. And that's exactly why I'm on this trade. The price push way to the downside, created swing high, push again, retest, and we are expecting another push to the downside. That's what I want. I don't want to take a trade where the price is ranging. Look at this one that I have there. Second example, the price push from this point, break above, retest, and you see the massive movement to the upside at this point. After this tweezer bottom right there, the price moved massively to the upside. But if you come to this area, you can see how the price keep ranging around here. Okay, that's not the kind of trade you want to enter. Then look at this point again. You can see how the price massively push to the upside, break. You need to understand the phase, whether the price break that particular Ishoboko correctively or impulsively. You can see how this massive this breakout is. Okay, the price is not actually ranging around here, doing all these movements around here. Okay, the price is actually going way to the upside. Okay, so once you see this breakout this way, you are waiting for a retest. So the price retested here, and at that retest, you look inside there to see what is the candlestick pattern forming around here. So if you look closely, you are going to see that we had the price being rejected at that point, giving us room to take a trade with that pin bar candlestick pattern, like at that zone. With that pin bar candlestick pattern at this zone, you can see a lot of them right there. So after that pin bar, the close of the pin bar, one should be taking trade at the close of that pin bar to the upside. So you can see, if you take that trade, you see how price massively go to the upside. So now if you look here, each time the price break, there will be a retest. Okay, most time. Okay, so even here the price actually broke that zone and retested. Okay, then after the retest, you are still going to ride it to the downside. You can actually keep checking out this. You can see here, this is how it works. How this price keep repeating the same pattern, the same thing. You can see the price massively break this, retested this zone, gave us entry with that candlestick pattern right there. Okay, so after that candlestick pattern, you are taking our trade. You can call this morning star because you have the bigger candle, bearish candle, the smaller candle, and the bullish momentum candlestick right there. Then the price push to the upside. So each time the price break this particular indicator, the price tends to retest the indicator, giving you room to enter the trade. This is a simple price action strategy. Okay, so it do happen most time it happens. You can see this massive break. Okay, this massive break, then try retesting, go again, and retested fully at this point. Okay, so at this point you look for any candlestick pattern to take the trade. Now if you look here, the price actually break using this momentum candlestick to the upside, then giving us a pattern to take this trade. Okay, which is bearish flag. Okay, after the breakout from the bearish flag, you are going to be taking that trade to the upside. That's how to trade this strategy, guys. The strategy is simple, easy to use. Okay, so you just have to keep checking out where you discover the breakout, then make entry. So before I conclude this video, let me share the setup with you guys. It's very simple. I am using only one indicator right here, which is Ishimoku, and the settings is by default. The only difference is that I just changed these three colors, 1, 2, 3. Sorry, if I reset it to default this way, you can see everything is in place. I will just change this to my background color, which is white. Change this one to my background white. Change this, the last one with my background color, which is white also, and I'm done. And that's exactly what you have here. Okay, so it's simple, it's easy to use, and it's also profitable, guys. Okay, so that's that for this video, and I will see you guys in the next one. Bye for now, guys. Enjoy.